Hello everybody, hope that you're doing very well and welcome to this evening's Contenders live stream where we're going to be going over Fibonacci part 2, and in today's part it's going to be the negative Fibonacci levels and how I use these daily in trading. So it's a tool, another tool that I use daily on trades that I'm taking. So it's a really cool tool, core tool for me. Get my words out. So yeah, today's going to be very helpful, I believe, for you all. So that's going to be the main focus, and starting with XRP chart of the week, which is more from a Elliott wave perspective, but nevertheless I just had to include this one just because I feel it's a coin firstly that I'm asked about quite a lot, obviously in the champions chat, but a lot of people are interested in XRP. It has the swell, I hope I'm pronouncing that right, this Swell conference, whatever they've got coming up in the, I think it's tomorrow or Friday, or across 2 days, so the 7th and 8th. So we got that coming up as well. So there's a lot of hype around the coin. So I'd like to give my perspective on it and how I am actually trading it right now. So I'm already in the short, but literally it's pretty much an entry. So you'll see my perspective of why I'm short, basically. Well, I'll get on to that in a second, but yeah, XRP to start with, and then yeah, Fibonacci, focusing primarily on the negative Fibonacci ratios today. And I know some of you may have never seen this before, so it'll be a new topic for you. And the people that do have experience, I hope that tonight is beneficial to you nevertheless. So thank you everybody, and yeah, let's begin. Well, I'll just make sure everybody can hear me. Sound is all good. Yeah, thank you for that, Doltex, straight away confirming the sound's good. And with that said, let's begin. So XRP. Let me load up the chart here a second. Well, obviously we can see Bitcoin. Obviously I've been shorting this today, and we can see Bitcoin's currently bouncing off our champions channel, and you can see more or less to the dollar off the 6.6. So that was pretty nice. Obviously we've already taken profit one, but I'll cover Bitcoin at the end and what I'm looking at on that. But coming to XRP here, let's zoom out a little bit. Okay. So XRP, for me, it's a little bit of Elliott wave sort of theory, along with you know, if you don't understand Elliott wave yet, just ignore the Elliott waves, and you look at this simply as a downwards move, okay, a bear flag or a pennant, and looking for this secondary move to the downside. Okay, so you know, if you have zero Elliott wave theory, just look at it like this: down, consolidation, down, sort of thing. Okay, so to give you your three waves kind of move. I'm looking at this as a form of a triangle in a WXY, giving you a 3-3, and you know, looking for a 3-leg down, and also the reasons why I like trading triangles. Okay, so firstly, with the triangle perspective, you have to know that when you're trading a triangle, okay, so when we're trading a triangle, okay, your risk is really defined, okay, because the risk here, if you're looking to short this leg up here, okay, so if you are looking to short this, your risk is going to be above the point of C, okay, or above the point of A if you want to give yourself a little bit of space. So you're talking about was about a percentage less, okay, so yeah, about 2% more or less from my entry. So the risk is basically defined. You know 100% your invalidation. You know where you are wrong on this type of trade. Okay, so it's not one of those that leave you thinking, oh, you know, it could hit this level, it could hit this level. You know, where do I place my stop? Your stop loss is set in stone on a triangle, because your rule set would say that the last leg of the triangle. So if you're looking at 1, 2, 3, 4, 5 touch points, essentially, you know that on this fifth point up, you cannot see to maintain it being valid, cannot see this final move come above the C. So if you look A, B, C, D, E, we know that E cannot go above C. Okay, I actually gave my stop a little bit more above the A. Or it's slightly in the middle. I didn't want to go one tick above it, but nevertheless, the invalidation, you can safely say it's above the 8. 100% cannot be going above there. So that's where you can place your stop loss. So in my opinion, it's a really nice short. Firstly, I think we can all agree that this did trade really nice. You know, looking at it without Elliott wave, rising wedge. So you got the rising wedge, but if you look at it with a starting diagonal, then you have got the ABC, 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 and the 1, 2, 3, 4, 5, with the overthrow in the 5th, and then with the sharp rejection once falling from the wedge. And that is exactly what you want to see. To be a valid rising wedge, you need to see the sharp rejections, and you definitely got that. So this is 100% like really valid, the first part. Okay, and then you obviously come over to the second part of it here, which in my opinion is going to be some form of B or X, coming for another wave to the downside. There's one thing to know. There's one thing to know of what we cannot ignore. Okay, and that is the fact that from the drop, because we're focusing on fibs, from the overall low to the overall high, you hit the 618 to the sat pretty much. You're talking about to the sat, and you got that very nice bounce. Okay, so you did get that bounce follow through, didn't you? So that's one thing to just be aware of. You are currently still above the weekly, so that's another reason of why the stop loss can be safely placed above the C, is because you have the weekly resistance here as well. And just for another area of confluence for the stop loss. And as you all know, if you're in the champion stream, obviously I done this one on live stream, where I told you all that this was literally bouncing off the 618. So from there, you obviously go from low to high. You hit the 618 and you get a bounce. Okay, and then from that secondary 618, okay, I'll do it all again so you saw, went from the low of the bounce up to the high of the bounce. Okay, so from low of the bounce to the high of the bounce, price came down here. Okay, it came down, hit that 618, and it did come straight up to your weekly level. So this is obviously our weekly resistance, which is being marked for a few months now. we come down, hit the 618, hit the top. Okay, so your top of the weekly, and then in my opinion, it's formed this. I will show you what I originally had the trend line as. I did have it as like this is the trend line, and I was looking as for an A, B, C, D, and then an E back up, and then this lower wick kind of threw it off. So I did adjust the trend line to here. But my original trend line was like this, okay, and obviously for I wasn't in the short at this point, and here we were. I was just envisioning the D and was envisioning the push up. We obviously had that swift wick to the downside, but straight back up. So arguably, I've adjusted it to here, but you could pretty much keep it here, and it's not going to make really too much difference to it now. But nevertheless, looking at that as an A, B coming off of the 618, C off of the weekly, D. A little bit of a wick through, but it doesn't come below the B there, so it's totally valid. And then obviously the D coming up again to here, just our trend line resistance. You can clearly see you're not closing through it. All I want to say on this one is the fact that it's really inversed to Bitcoin. So let me just show you something. This is something that you want to be checking. If you're looking to long or short a coin, like I'm obviously shorting it here, it doesn't make sense to short something that has an inverse correlation with something that you're looking to long, because essentially, well, let me just load this up for you. So what you want to do, if you want to check the inverse or converse correlation to something, so whether something follows or is inverse to something, compare or add symbol and trading view. It's really, really, really great tool. So this is another add-in, I guess, of the lesson. But yeah, click on this, okay, and type in BTC USD or XBT USD. So we want to look at Bitcoin, comparing it to how it moves against XRP, because for me this is very, very important if you trade XRP, because the inverse correlation is outstanding. Okay, so we click on BTC, and this orange data here is the Bitcoin price. Okay, so that's obviously from our drop from 6k down to 3k, up to high 13ks, down to 7,300, up to 10,500. So this is the Bitcoin chart here. Okay, and now compare it. It's amazing. It's really amazing. Now compare it to XRP here. You see that they do opposites of each other. So we can see here during that Bitcoin, during the XRP crash, or not, let's just say the move down of XRP was obviously the time when Bitcoin was moving up. So very inverse. You have Bitcoin moving up, you had XRP going down. Okay, here on this little segment, you can clearly see more or less that Bitcoin was heading down in this period, and you had XRP heading upwards. Okay, then another totally inverse correlation of XRP heading down while Bitcoin headed up. Okay, and then lately, if we just zoom in this a little bit, sometimes it gets a little bit hard to see exactly, but here you can clearly see, XRP heading to the upside. Bitcoin, obviously, as we all know, was going more sideways here, but obviously on that final drop we had Bitcoin dropping down to 7,300 and XRP with that little push up to the upside. And then very recently now we obviously see XRP moving, very quickly, swift move to the downside, while Bitcoin obviously got that great move to the upside, but again a very, very inverse correlation. And now they're both going sideways, aren't they? So since the XRP moved down, the Bitcoin moved up, they've both headed sideways here. So all I want to stress is that if Bitcoin falls here, so if Bitcoin loses support and heads down, XRP could head up just because of that inverse correlation. I wouldn't trade primarily off of this inverse correlation. Myself, I wouldn't trade off of the inverse correlation, but it's something you got to be aware of, because if you are looking to long XRP and short Bitcoin, which is essentially the same trade. If history repeats and the correlation sort of sticks, because you would essentially be longing Bitcoin, and if you long Bitcoin and short XRP, it's essentially the same trade, because if Bitcoin moves up, you'd expect XRP to move down. So it doesn't really make too much sense to be overexposed in that way. So just think of it like that. Obviously, if you want to, if you're looking for hedges, then that's a different strategy. But it wouldn't technically make too much sense to be in the, or unless you want to be that exposed to a certain directional trade, if you feel confident in that trade. But just be aware that you are essentially trading two positions, so you're kind of multiplying your position if you're trading it and not aware of this inverse correlation. So it's really, really important that you're aware of this. I think this is very, very important, because if Bitcoin gets a strong move to the upside, well, XRP is going to likely head down, and if Bitcoin heads down, you could see XRP break out of this triangle to the upside. So just be really, really aware of that inverse correlation, because they're totally inverse at the moment. Obviously, I'm in a day trade short, so I'm only in the day trade short, which I'll be covering at the end of the stream. But nevertheless, yeah, I'm short on this one. I'm short on XRP currently. Okay, so yeah, that's my views on XRP. I am expecting this leg down. Invalidation is literally only a few percent, so it's not so much it's the only other few percent, but it's that my invalidation is very, very clear. I know where I want to be out, and I know where I'm wrong, and that's very, very important as a trader, knowing when you're wrong and getting out like that. Getting out like that without a second's hesitation and just saying, right, I'm wrong on this trade, on to the next one. And for me, this is a very obvious invalidation. I know where I'm wrong, and I know where I'm right, essentially. So as I didn't actually mention it, did I? The target for this. My target is simply below the last low, so I want to see it hold the gold. I would like to see it hold the champions channel here down to the 6.6. That would be for me a buy. Okay, so I'm not going to buy in straight away, so I don't have orders. But if it does something like this, hits, bounces, comes down, holds, and moves up, that for me is a buy. Every day of the week sort of thing, that for me is a buy 100% of the time. Why? Because when we come to Elliott wave theory here, whether this is wave one and we're putting in a 2 and we're coming up for a third, obviously then you're looking for very high prices on XRP. Or alternatively, whether this is an A, this is a B, and we're coming up for a C, both equal a rise should be coming. Okay, so I'm going to be looking for buys. This is more of a short-term short on XRP. If the Champions Channel doesn't hold, I'd be looking to the 786 monthly here. But I would prefer the Champions Channel with myself to hold. Obviously, I'd make more profits if it just goes straight down. But nevertheless, I would like to see this hold to essentially trade that long, looking for a wave, either C or 3. For me, it makes no difference whether it turns into a 3 or a C. Couldn't care less, if I'm honest. For me, it would be a long here. Looking to trade what's to come, and to make that clear, this is either wave 1 starting diag of the 1, 2, 3, 4 and a 5, or this is starting diag of the A, that's a B, and you're coming up for a C. You see what I mean, that both of them should lead to higher prices. The invalidation is taking the low, by the way. That's the invalidation of a wave of this being incorrect. But yeah, for me this is really, really nice at the moment. So in the short, so I am in a short position, looking to trade it down to this region where if it holds, so I'm not blindly going to buy, but if it holds and gets a bounce and get a bit of follow through, I would look to long this up to higher levels on XRP. So that's my plan, and all I want to know is about the swell. I want to know about the swell is that it's obviously going to have an effect. I would have imagined that this thing is going to have an effect on the price. But in my opinion, I just know that this conference seems really, really hyped from what I've seen. As you all know, I literally couldn't care less, if I'm honest, about the news. I literally don't even have a clue what it is. I couldn't care less, if I'm honest with you, what it is. Some people are going to tell you that it's apparently some amazing sort of thing for XRP, and it's going to be really bullish. I couldn't care less, if I'm honest, and if I get stopped out, I get stopped out, if it is so amazing. But the way I view it is it's very likely priced in. People have known about this for so long. I don't see why you'd get a rise on the day of the event unless they give out some news that people are not aware of, and then obviously it's not priced in if you're not aware. But if it's just going to be announcing something that people are already expecting, well, where's this extra capital going to come from? People that are already invested in Swell have already bought in. They're not going to be adding fresh capital upon the day it's announced, sort of released. In my humble opinion, it's going to be a buy the rumour, sort of buy the run-up, and the actual release, it should see a sell-off. Obviously, I can be totally wrong on that. Absolutely, I can be wrong on that. But that's, how I generally trade news, and I don't expect this time to be any difference. So I have the technical side on me, looking to trade this from the chart, and I also feel I have the fundamentals, unless it's some sort of amazing thing that I'm totally ignorant of. I don't see that it's going to pump the price, but can be wrong on that one. The only way I do see this getting a shoot to the upside, and I will be, essentially wrong on this, is if Bitcoin does fall. And I am in that day trade short, so I'm expecting lower prices here, but I'm not expecting too heavy of a drop, so it's only if Bitcoin starts losing major support that you could see that inverse correlation come back in on this one. So just be aware of that inverse correlation, basically. And if we do see support lost on Bitcoin, you could see that this inverse correlation maintains. So yeah, that's really important for me. I'll take those two questions. So I always refer to XRP on the Binance charts, but I do trade it primarily on BitMEX. So a little bit of a weird one, but I trade this on Binance, and I trade it on BitMEX, but I always try it on Binance. Okay, but BitMEX. So, but yeah, basically I do trade this on BitMEX. Okay, so my trade is on BitMEX, but I chart it off of Binance, which might seem a bit strange, but it's just the way I've always done it. And I just find that when you compare the charts, it's just so much cleaner on this. But you can clearly see you got the same pattern here with the low, the high, the lower high, the higher low, the lower high. So it's got the exact same. Obviously it's a little bit more scammy with the wicks here on this exchange, but you've got the same sort of triangle going on this exchange. It's just so much cleaner on Binance. And I always, if you see here, like on my BitMEX watch list, I always have them next to each other. Because I always try it off of Binance chart, but I trade the BitMEX alts for shorting, especially. Obviously I'll trade Binance altcoins all day long, but I don't trade them short just because I don't like the interface of Binance for shorting. It's as simple as that, really. I just don't like it. So it's not saying that you cannot short XRP on Binance. You can, but I don't. I do it on BitMEX just for personal preference. But if you want to do that, if you want to do it on Binance, be my guest. But again, this is not financial advice. So this is for educational reasons only. I'm not telling you to short XRP here. This is just totally educational. I'm not a financial advisor. At what point in price action can you tell if the next wave is actually a wave C or a wave 3? The only way you're going to be able to really sort of know is if you start going above the 1618 extension. If you start going above the 1618 extension, then you would lean into a third wave, and that's really the only time you can tell. It's not going to make any difference in the world to you buying this now, whether it's a 3 or a C. You literally don't care. Either way, you should be making money. And then it's just if it goes past the 1618, that's when you would lean into the third wave, or you start getting a really big increase in volume at the start of the increase in price, then you would also lean towards it being a wave 3 and being a 161 extension plus that's coming up. But at this moment in time, you wouldn't be able to know. You just wouldn't know, and you'd be looking to trade it long either way, because you should make money whether it's a C or a 3. Doesn't really matter to you. Both should equal higher prices. So that's XRP, and hopefully I've cleared up a lot of reasons why I'm shorting this, what I'm looking for in terms of targets, and then where I'm going next if target hits and it holds. I hope that does make sense to you all. I'm just going to take a drink and then we'll continue with the main show tonight, I guess. Fibonacci. So Fibonacci, obviously part 1 last week. We went through excuse me. We went through obviously last week the internal sort of Fibonacci retracement levels. Okay, so tonight is going to be expanding upon that. Okay, it's hopefully not going to confuse anybody tonight. It's just an extra layer that you can add on to your technical analysis. And I always think in terms of my technical analysis, I don't want to make things really, really, really complex. I don't want to make a system that's really, really difficult to understand. And I don't believe by adding this in, it's going to confuse people. I think it's just, it's only going to help you. Okay, this is something that I use every day. So I do believe it's crucial for you to basically understand this fully. Okay, so negative Fibonacci levels, if you're not aware what they are or how to use them, I guess essentially. So negative Fibonacci tools is helpful to add in another level of confluence. So we're always looking for more reasons. As I mentioned last week, looking at Champions Channel, many people have actually started using it on its own. And I kind of said, last week, you don't really want to be using it on its own. You want to see more confluence. But people have actually been winning their trades, so fair play. But I wouldn't do it myself. But what we can see is there's, you want to add in that more levels of confluence. The more that you can add in, the more confident you get on those setups. And that's what you want. Confidence in your setups, confidence in the trades. And I'll go through the short. I just got a real perfect example of the short I took on Bitcoin yesterday. The confluence that we had on this short was absolutely amazing. Obviously, I posted this yesterday in the Champions chat, because I just felt this short was really, really, really nice. And thankfully, it's played out and it's already hit take profit 1. So it's kind of just like, it doesn't matter where it goes up or down. I'd like it to head a little bit more south, I guess, but it doesn't really matter to us anymore if it goes up or down, because it take profit 1. And I just love to show you this in detail, the confluence. So yeah, that's what we primarily use it for, another level of confluence on the fibs. Okay, but I've put this in, asterisks. You could use this method alone. So you could literally use fib retracement with the negative aspect to it, and you could use it alone, but I really don't recommend it. If you want to listen to me, I'd say do not use this alone, but you essentially could build a trading strategy with just this concept. Essentially, you could, but not recommended, okay? And the negative Fibonacci tool is used for moves which go external from the Fibonacci pool range that you are trading. If this doesn't make sense, I am going to explain the differences between external and internal later on as we go through the slides. I'll explain that in more detail. But essentially, this is when you're going external from your original pool, and that's where you get targets or your entries for if you're not in the shorts or your longs, etc. It's a good way of judging where support can be found on a coin or stock, whatever you want to use it on, to be honest. So yeah, that's what we're going to be going over tonight, the negative, and I've got some examples for you as well. As always, I think that they're very helpful. So starting off, I guess, giving you the actual negative fibs I use. So obviously the top here is all standard, so that's just our absolute standard fib levels. What I add in myself is the negative 236, okay? Zero. So the negative 0.236, the negative 0.618, the negative 1, and the negative 1.618, okay? So those are the 4 that I would add in. All I want to highlight is that on the stock market, I actually prefer using the negative 0.272. So I've not highlighted it here, but just be aware that I will sometimes use the 272 and I will sometimes use the 236. I like to compare or have both of them on, and then I will compare the confluences of what's level stronger. As I've mentioned, I never use this alone, so it's never a tool that I would just primarily use on its own. So you could have in both. Essentially, the levels are quite close together. That's the thing. Okay, the same with the negative 382. Would occasionally refer to the negative 382 as well, to be honest, so you could add in that as well, but it just becomes too much if you have 236, 382 and 272. They're all close together. It just gets a little bit too much. But I do also use the 272 primarily more on stocks. That's the only thing, but it's something I will tick just to see if is there more confluence at the 272 or the 236. That's something for each chart is going to be different. There's no you don't know that, do you? So you could take 272 as well and negative 236 382 if you would like, but primarily those two. I would do 0618, 1618, negative 1, okay? So these are the levels that I like to use primarily for targets when I'm in a position, okay? But you can also use them for, if you are not in a position from the internal retracement, you can use it for ideas of where you'll get support or resistance once you've gone external from that move. Again, I will explain this a little bit later, what that actually means, but just so you're aware, that's essentially what you use this for, is for entries and exits. So it's this very nice strategy. It's one of those another leading indicators where you're predicting where price is going to be heading to and then where it's going to be reversing. With this tool, you can essentially, as some people say, like, not my own words, but some people were like, Daniel, you're a trading god. Like, how can you predict where it was going to turn and where it was going to? And, this is one of the tools that helped me do that. Okay, and along with obviously Elliott waves, they're another tool which you predict the future with, essentially. So fibs and Elliott waves can make you seem really cool, really genius, I guess. And it's amazing because the amount of times that it does play out is just, it's absolutely amazing. I mean, absolutely amazing. That's all I'm going to say. I've honestly made so much money through fibs and Elliott waves. Like, it's outstanding. It really is. So as you can tell, I absolutely love them, and I hope that all of you love it as much as me by the time I finish this series. Which, by the way, I think there's going to be about six parts. So there's obviously so much to Fibonacci. That there's likely going to be 6. Just by the way, we're on part 2, and I think there's going to be about 6 parts to this, by the way. So moving on. Obviously, so this is essentially what we're looking for. Okay, so as you can see here, obviously I've donated this on a made up scenario, but obviously what I've donated here is a little uptrend. Okay, so we can see an uptrend. Okay, so higher highs and higher lows. Okay, and what we're looking for is just, I've taken the example of this section of the uptrend. What we can see is this is clearly making high highs and high lows, but we're focused on this part of the uptrend. Okay, this segment here to this segment here. Okay, so we'd have taken our fib at the time. Let's pretend we can't see these last 3 waves, and we're essentially looking at this section here. And what has this done? We go from take our fib from low to the high. And we see that, say, price comes down to the Champions Channel and finds support on the 6.6 here. Okay, so once we've found support at 6.6, that's all well and great, isn't it? We can recognize that as a buy as long as we can see another level of confluence. Okay, so if we can see another level of confluence here. Okay, maybe in this example, I've put old resistance flip into support, e.g. a horizontal. That's your confluence. You've got something else that's backing you up to buy that. Okay, because if you just buy every 618, you're going to lose money because there's no art in buying just every 618 that comes along. It's not going to work if you just buy every single one, in my opinion. You got to have more confluence than just buying every 618 that comes. Otherwise, it would be too easy. So you're looking for at least 2 or 3 other levels of confluence. So when it comes down to the 618 here, let's say we buy, okay, to the 6.6, and we get all 3 positions filled. Remembering that I front run the 618, I have a buy in this middle of the 618 to the 6.6, and then an order on the 6.6. So you got 3 orders on the Champions Channel, and let's say all 3 orders fill here because we hit the 6.6. Okay, so we got all 3 orders filled, and then we're left in the predicament. Okay, so where's target? Okay, so this is where the negative Fibonacci can help you or assist you looking for targets. Okay, remember, I wouldn't just say, okay, target 1 -236, target 2 -618, and that's it, set my take profits and leave. I'm always primarily using my horizontals for targets, adding in then fib retracements, extensions, harmonics, etc. But this is a way that you can very basically look for targets. Okay, so it's very basic, but you will see that price does react from these levels. So it is good take profit regions, or if you are not long from here, you could look for shorts off of these regions. Okay, but we're going to be keeping it nice and easy here of going through the example that we bought at a 618, saying that our take profit 1 was 236. We got a small retracement. Take profit 2, the negative 618, and let's say it moves up again to the -1 where we close out of our trade, let's say, and that would be a 1-to-1 extension from here to here up again. Okay, so a 1-to-1 of that move is how you get the 1-to-1 basically. So yeah, that's a very basic overview of the negative Fibonacci, that you essentially are using the internal side of it to get your Champions Channel, and then from there you get targets. Okay, and you will see this happen a lot. A lot of the time you get reactions from these negative fibs, and they are helpful for taking smaller profits. Okay, or if you see these sort of levels, I really like the negative 618, especially on crypto. If this lines up with as I'll show you on this was the perfect on Bitcoin. Like, you just see all these levels lining up, and that's where you see strong confluence. What the short I took on Bitcoin, you had 4 different confluences lining up, and it's just like, when you see that much confluence, it's just so lovely to see. And so that's essentially what you were using this for. Okay, for the retracement and then targets. Or if you're not in the long to target here, you could look for shorts off of these level again if you see confluences. Okay, can you draw fibs with negative as an example? Real fib? Yeah, absolutely. I'm going to do that at the end. That's no problem at all. This was more of an example to show the theory, and I've gotten some like examples here, but yeah, I can pull this real live and show you how I'm doing that on stream. No problem at all. To answer that question. And the other question was, I love using the negative 272. Yeah, negative 0.272 is really nice. So yeah, I do like it as well. So here's an example on Litecoin that we have here, and I can load this up in a second as well. But basically what we done here, or what I done here, is pull a fib from the high of the rally to the low of what that point was of the low. So we're going from the high to the low, and you see price coming up here and tapping the 0.5, tapping 0.5, tapping 0.05, eventually coming down to the 236, and that's where it found support. You can see the wicks onto the 236 before rallying. So I'll just read this out, and then I'll load up the Litecoin chart for you. So a standard Fibonacci retracement pull to find the resistance. So our standards from high to low, we look to find resistances here. Okay, so our standard pull to find the resistance. The negative Fibonacci levels then can be used for a target. Okay, so if we shorted here, we could use this as a target for taking profits. Okay, or if you did not short here, you could still do the same pull and look for a long on this level. Okay, so negative Fibonacci pulls are used to find entries and or targets from an internal retracement. The negative levels need to be used in confluence with another technical tool to verify the target entry. Just really want to stress that I never would use it alone. Okay, so as you can see here on Litecoin, the negative 236 is where it found support, and the bounce got underway. The negative levels I use are, and then I've just highlighted what I use here essentially. And then this is another explanation of the same sort of chart, that you go from pool 1, so you start at 1, bring it down to 2. Look for the reaction at 3, that as we know could be off of any of these fibs. You could top out at the 382, okay, and head down if the market is very weak. Okay, that's where you top out on a weak market, 382. You can see here, you do hit the 382, you get a little bit of an upsloping channel that you break to the top of. Don't quite hit the 0.5. As you can see, you never took the high of this wick here, so you just form a lower high. You know, bearishly, it's already looking, rejecting from 382. You don't take out any highs. It's, you know, it's looking bearish. You don't even reach the 0.5 fib, and at this point, market does head down, and you hit the negative 236. That's where you find support. So if I just load up Litecoin for you all, I think I already have this on my chart. Let's just delete it, or everything here that I've got here a second. Actually, I'll keep this one on because this is pretty interesting what's happening right now on Litecoin. But yeah, this is, I will delete that a second. So this is essentially what we have going on here. So this was the example on Litecoin. Okay, so let's firstly make sure that you have the negative Fibonacci selected, and then put in if you want to add that or not. But that's what we need to do first. Set it to an extension negative. Okay, and then we're pulling from the high of the rally, so we can see a rally up here. We're going from the high of the rally to the low of the rally. Okay, and at this point, obviously what we just have, let's just ignore the bottom section. At first, we just have the internal retracement. So from this high to this low, we're just looking for an internal retracement in here. Okay, and we could drag that along to what it was at the time. Okay, and this is what the zoomed in view. So from at this moment in time, all we'd be looking for is to short a rally. Okay, so short in the next rally that comes. Okay, we can see here, got a little bit of a rally coming up to the 382, coming down, coming in a little channel here, eventually coming up for some highs. Okay, forming that pretty much double top of this high. Okay, so you get your double top, you get another move down, you get another try and pushing through the level. You obviously see more or less you got a sort of triple, nearly quadruple top coming up. So someone was defending this level hard. So you got almost quadruple top there. And nevertheless, you know, topping out of the move, getting another leg back down, another rally, which ultimately fails to the downside. And this is, you know, this was a very nice one. If you had, well, I guess if you had orders waiting there, or you just shorted after the shooting star, you know, that's a very, very, very big lookout that you would be dropping. You know, you see such a rally to the upside, you take out all the previous highs. Obviously in this section here I'm referring to, you don't take out highs below that, but obviously you're going lower high, lower high, lower high, lower high, but you take out some recent highs. So everybody that was short from here had moved their stops down at this point. So at this point you would have been, you know, leaning on a short. You know, you come up, you hit the weekly, so you hit that weekly, He also obviously hit again the 382, so you see that's your confluence, and then also the fact that you got a shooting star candle, so a really big upper wick. Okay, and then obviously you can see, you know, 8, 12, you know, about 1 day later more or less, you know, the next day you see that really big drop to the downside. Again, this is where your negative levels come into play. Okay, so then from our internal retracement, which we can say topped out more or less at the 0.5, it comes down to the negative 236, and that's where you clearly found support, isn't it? So you've got support and a support again, and it rallied. And as we all know, Litecoin rallied over the last few days, which did help Bitcoin get its rally to the weekly as well, where it obviously rejected as well. You're down $300 odd from that rejection, so that's pretty nice. And then, yeah, that's what you're looking at basically, so aren't you? So if you're shorting at this region, or you're shorting here, or you know, wherever you shorted this, you would look for this, just using this as a target. Okay, and we want to add in something else, but you would look at this essentially as, you could use this as one reason or one level for a target, and then you want to see what's around here to make this confluent. Okay, and what's nice about this rally that we're getting here, so for another example now for this section, the same again. Okay, so we could take our fibs from now what is low of the move up to the high, okay, which was the high back here, and look at this. Really nice in my opinion. So from low to high, you come down, you hit the 0.5 Fibonacci where you find support. Okay, so here you're finding support of the 0.5. You can see the long lower wicks. Okay, so long lower wick onto the 0.5 exactly, board up, long lower wick, another long lower wick. So each time you're essentially getting zero follow through. So this is what you look for bullish signs in candlesticks, where you take the low. You see that each one is taking the low very slightly. So you take the low of this time, straight back up. Take the low, straight back up. Take the low, straight back up. That's giving you an indication, okay, an indication that price isn't going to be going much lower, because every drop gets bought up very quickly. And obviously, if you know this pattern, you got the 3 valleys. Okay, so this is a pattern that I like to trade long off of. Okay, you got 3 valleys. That's another long signal, and yeah, obviously the rest is history. We've got to move up, but what's really nice about this is then you look at these negative levels. Okay, so let's just move this a bit closer, and I'll show you this on the 1 hour time frame, because it's perfect, if I'm honest with you. So yeah, obviously we can see here the 0.5 was support, and look where you got your actions. You come up to the negative 236, hit the negative 236, you come back down, and this is just technical analysis perfect in my opinion. From the high, come down to the 0.5, get the 3 valley pattern, rise. Okay, hit the negative 236, rejection. Okay, old resistance becomes support. Perfect SR flip, isn't it? You can't get any more perfect than that. So old resistance flips to support, and look at this, you get your second reaction to the upside. Where do you top out? The negative 618. So that is the negative 236 and the negative 618 both doing their jobs as you would expect. So here you get your rise, drop down to the 0.5 fib, 3 valleys, rise to the 236, rejection, a resistance support flip off of the top. Okay, get the flip, move back up to the 236, form a higher low, move up to the negative 618, come back down, form a range more or less between our monthly, which is support, and still looking at 618, obviously weekly resistance a little bit higher, but then your range, so you're currently above that monthly, aren't you? So you're a little bit range bound between here before you're going to look for that next break. So yeah, that's a really nice example, I think, of 2 examples of how you could have traded this. Obviously the first pull, okay, being from the high to the low, okay, where it topped out or bottomed out at the negative 236, okay, so that would have been one option, and then you obviously get your secondary of it coming to the 236, where you could have, you know, if you're a day trader, you know, this is a day trading position, like nothing you'd hold long term, but day trade short that, okay, down to your SR level of old resistance flipping to support, where you could look to long that again, okay, and then looking to trade up to the negative 618 for an example, where you could either look to take profits or short that, you know, and then obviously again not a long-term trade, but you know, day traders can short those type of moves, and that's clearly where you're banging into the resistance right now, and you see there that's an exact sat. So there's somebody defending that level still, but that's just another example that I wanted to give, and we can go through some more. But yeah, I just felt that was a lovely example, because it's live happening right now. It's not some example from 10 years in the past. You know, it's a live example that's literally happening right now on Litecoin. So I think that was a nice one. And obviously I've been trading Litecoin recently, and yeah, it's just nice. So yeah, Next, I want to move on to internal versus external retracements. I'll take the rest of the questions at the end. I will take the rest of the questions at the end, just so I keep the flow of the video going. So internal versus external retracements. This is a little bit more basic, but I just want to fully explain this. Just because when I refer to this, people need to know what I'm on about. Otherwise, people get lost. If I start explaining concepts that half the group know, half the don't, half the group that don't know obviously get very frustrated. So internally, okay, what we're looking at is if we have a rise, okay, if we have a rise, okay, and then a drop, okay, then what we would say is we would take fibs, for example, from this high to this low, and let's just put this on standard a second, okay, and when we rise up here, as the rise starts coming, this is an internal retracement from this swing high to this swing low. So everything that happens within here, okay, everything that happens within here is internal to this swing. So that's where I'd say the overall high to overall low. Everything that then goes on is internal to this, okay. So then as you get this next rise, okay, let's say we top out here. As you then come back down, okay, your next move is then internal to this one. So it's like a fractal more or less, isn't it? So this swing then here is internal from here to here, okay, and then let's say that we find support again and we get another move up. Well, this rise here is internal from this high to this low. So you at some point you're going to break that, aren't you? And at that point you become external from, you're not taking any more internal retracements of it. Let's say this was an all-time high and you're moving up all-time highs. You're no longer in internal retracements, are you? You're then becoming external, and you have to use another tool or another Fibonacci technique, which I think I'll be teaching next week, I believe, with extensions. But it's just like that. I just want to really highlight so people know the difference, that this is obviously you know, name itself is kind of obvious, I guess, but this is obviously internal to this overall swing, and then this move would be internal from that high, that low to that high. This move as it was going along would be internal from that high to that low, and when you break that high, you're no longer internal of this retracement, you're then external, and you're going to have to refer to different fib levels basically. I just wanted to explain that. If anybody has any questions about that, please just let me know, and I'll take all the questions at the end. But I hope that it's not too difficult concept, I don't believe. But I just wanted to make sure everybody knew when I say internal and external in the chat that I don't have to keep answering that question. Cool. So that's what that is essentially. Okay, so another example here of negative fibs essentially. So this is an example on off of Bitcoin, and this was again yesterday, from the low to the high, seeing it come down to the 618. So our champions channel, more or less, we got to wick through it, but that's absolutely fine. Okay, so we saw that wick through it, which obviously the confluence here was the monthly level. So as you'll know, on my monthly level on Bitcoin is 9,250, 9,250, obviously $10 different, but you're looking for a long there because that's the confluence of the 618, or 618 with the monthly $10 above that. So that's confluence for me. So when you saw this drop down, okay, then you obviously can see the rise up to here to the negative 236, and it did reject. In the end, you come up to the negative 618 here, which was obviously the 618 of the overall high to low of this move, all internal still. But I'll go through that in a second. But yeah, this was just a random another example of I just wanted to say, so when you're logging the Champions channel, as I've kind of already highlighted today, but once you long the Champions channel, you can use this as one form of looking for targets. Okay, so that was an example on Bitcoin. Okay, and another example here on WAN of how you can, this I think was a really nice example. You know when we think back to the parallel channels video, okay, and think how many times did we see channels forming off of fib levels, and the answer is they form quite a lot. So this is a really nice example on WAN, where we go from high down to low. You obviously get the move up, which topped out to the sat on the 0.5 fib level. Okay, so from high to low, top out at the 0.5 fib. You see the negative 236 here, how long literally it supported this for. You're talking a month plus of supporting price. So that that negative fib level essentially gave you the bottom of the channel. So that gave you the bottom of the channel. Okay, and then obviously you know that you're looking for the top, and I must have pulled this from a different time frame, but on a different time frame you would have got some candle closes at the top here, and then you can also see, you know, how relevant the middle of the channel is. So, and that's essentially all coming from the negative 236, where price did bottom out on. You can see as soon as you hit it, you did get a reaction to the upside, and these moves on WAN are pretty big by the way in percentages, but nevertheless from high to low, hitting the 0.5, hitting the negative 236, getting the reaction of a bounce, and then literally supporting price for a few months. So that's another example there of a way that you can look for support essentially of the negative fib levels. Okay, and I want to end here before I take all your questions, because I can see there's a few there. Want to end with looking at why I shorted Bitcoin using the negative fib here as confluence, because in my opinion it was just beautiful. It really was. Actually, I'll do the questions before I go through this. When price is at all-time highs, would you recommend using negative fibs since there is no price history? It's one way you could use for fibs. I would use extension myself. I would use extensions. So I would use extensions you know, you want to be if at all-time highs, you want to be looking for extensions. You want to be looking for, I would also be looking for volume is very key. Look at volume. You also want to be looking at pitchforks are pretty useful for all-time highs. If you've got 3 nice pivots, you can use pitchforks. You can also use some Gann theory. So if you've got like an extension going into like a fixed square, you can also use a bit of Gann. So there's like different tools that you can use when something is an all-time high, but volume is generally one of the best indicators for when you're topping out. But yeah, at all-time highs myself, I'm not looking to short all-time highs. I'm looking to just carry on with it. Obviously you can then use these levels to take profits, but I myself don't look to short all-time highs. I look to run with all-time highs rather than shorting them. But yeah, you can use negative fibs with confluence, okay? But I wouldn't ever just short or take profit at a negative fib level. I'd want to see something else line up with it. But you can use that definitely. 618 represents 618 of the previous swing, but what does negative 618 represent? Well, it'd be negative 618. So let's say that you have, so it's all about the percentages really, isn't it? So if we have this, let's just put this back onto negative. Okay, so let's say okay, let's say that this is from this length, okay, to make this really obvious, from there to there. Okay, let's say price drops vertically, which is, let's just say price drops vertically, isn't it? So that's let's say that's a 100-point move. Okay, well that 100-point move down is that's a 1-to-1. Okay, so this is just 61% of that move. So this is just a 61% or 61.8% retracement of the original swing. Okay, and that's obviously a direct 100-point move. So that's a 100-point move. That's a 100-point move to the -1. It's just as simple as that, really. And obviously 618 is a 61.8% move of that original first swing. So I hope that explains that. Next question was, would you give priority to a normal Fibonacci pool 618 resistance or a negative 618 resistance? So I want to say I'd use it in confluence. I wouldn't say one is, I'm not going to say one's better than the other. I'm not going to say one's better than the other. I would say put them both on and look for levels which one lines up the most. I guess if I had to choose one, I would use the standard internal retracement. Okay, so I'd use a standard level of a high to low, and I'd look for it in the internal champions channel. But I don't have to choose that. But so if I had to choose one, I'd say, well, I'd just use the internal champions channel. But if I don't have to do that, so I'd look at more reasons of which is looking stronger. Does your negative 618 have more confluence, or does your 618 internal retracement have more confluence? You know, whatever the one then just had the most confluence is the trade I'd take. It's I wouldn't ever say it's one better than the other sort of thing, or giving priority to one or the other. It's whatever one has the most tools that line up with it. So as with everything that I teach, it's never something that you want to use alone. You want to combine things together, because you have to remember, in trading, it is essentially, you know, it is probability. So it's all about probabilities. There's never ever a guarantee. And when you know that there's no guarantees, you want to have the most probable odds in your favor, don't you? So instead of just, you know, let's say you have under your belt or of arsenal of technical tools. You really understand that. Let's say you really have mastered 5 tools, okay? And why would you take a trade where it's only got one tool lined up? Okay, and let's just say that equaling is 20% odds in your favor. Well, instead of having 20% odds, wouldn't you prefer to see 3 tools line up and then say have 60% odds in your favor? You see what I mean? That the more tools you line up, then we can say that we have more probabilities of our trade playing out. Obviously, 5 tools does not equal 100%, but it could equal 99%. But obviously, there's always that possibility of losing. But yeah, you know, you always want to add in as much as you can. The more that you, well, actually, that's not what I want to say. I wouldn't recommend adding 100 things on your chart, because that's going to give counter. What some things are going to say buy, some things are going to say sell, or it's just going to be too complex. But you know, if I can add in 3 tools and 3 things lining up, and that's just, you know, that's what I've been looking for. Okay, I wouldn't go with for one tool, because that one tool alone is for me not enough, because I want to see more things lining up to give me better probabilities, essentially. So yeah, I hope that answers your question as well. When the move becomes external, is that when we use negative fib levels, or do we use the projection tool, 3-point tool? Use them both. So the answer is use them both there, Karim. Literally, you would use them both. So let's say the question is that if we have a move up and down, do we use the negative fibs, okay, which we can say yes, we would use this, or do we use the 3-point tool, which is this? Well, the answer is we could use both. You know, there's no I really want to really hope I've explained this well enough that I don't want you to only be using one tool. You want to add in all those fib tools, and then you look for confluence. So it's not using the negative or using the extension. It's why not both? You know, use them both, and then look for where there's confluence. You know, with the WAN example, if one was waiting for 618 to take profits, then we see the 0.5 reject and went all the way back down. How to avoid this situation? Let me look. Let me see what you're on about. So WAN. So if one was waiting for 618, so if you longed here and you're waiting for the 618 to take profits, and we see the 0.5 rejected and coming all the way down, how do you avoid that situation? Well, I guess the only way that you can avoid it essentially is, I mean, this is a high percentage move. We're talking very double figures, high percentage move. I guess once you see something move like this, the only way you can avoid it essentially, if you've got your take profit 1 here, or are you closing out your trade? I guess if you're closing out your trade here, you should have a take profit lower. If you're looking for a target that's all the way up in the 6,000s, let's say, and your take profit 1 is the 618, and you see something come up and reject off of a fib prior, I'm not sure I would panic at this point. Obviously, I didn't do this. I wasn't doing this. But if let's say, for the example, that I longed the exact low here, and I am looking for 7,000 target in sats, and my take profit 1 is the 618, and I'm in my position with a stop loss set, and I see something heading up to my take profit 1, but prior to hitting take profit 1, I see a rejection to the downside. I think, unless I don't know, I haven't got any other things loaded up here. But if this level they rejected from had I guess if it had confluence, I'd be using it as a take profit target. So it's really difficult to say. I guess, like, if I'm looking at that, that's the level I've marked out where the price should reject, and it starts getting rejected prior to that. Well, very likely, unless that rejection occurred on really high volume, and if it did, I'd exit my position early. But if this was a low volume rejection, you know, I wouldn't expect this to reject here, and I would say, well, it's likely to continue up, okay? And that's would obviously have been, you know, if I did long here and was only taking profit here and oblivious to any volume rejections, or there was none, well, it's a trade that I lose. Again, you have to remember, you are 100% going to take losers. You know, I would take a loss. There's nothing to be ashamed of. You know, it happens every day in trading. You're going to take a loss. And in this sort of example, if you bought here, your take profit 1's here, and your target 7,000 for say, and you don't see a high volume rejection, you don't get, obviously you start seeing it, you know, let's just say that you're very oblivious to everything, and you just see it coming down here. You take the loss because it didn't hit take profit 1, didn't hit take profit 2. You had zero reason, let's say, to look to close out early, and it turns in from a winner to a loser, and that just happens in trading. You're not going to win everything, so you just got to be aware of that, and you are 100% going to take losses. So just embrace them, accept them, and make a note of what could have you seen of an early indication. I guess an early indication could have been, well, you hit the 0.5 exactly. You saw a big candle here. Did this have volume on? I don't know, but if this had a big spike in bear volume, then we could have said, well, that's a potential reason we could have looked to exit early, or at least, if you're buying here and you see a big red volume, we'll close out 50% of your position early, and then you can say close out 50%. If you get stopped, it's more break even, and if it continues back up, well, I guess great, you continue at 50%. That's the only way you can really avoid it. But in some situations, it's not going to hit target, and it will just stop you out, and that's nothing to be scared of. It's just going to happen in trading. It's just part of the game. Can you explain again what you taught last week about strong uptrend you look for pullback? Yes, I will explain that, because a lot of people had a lot of questions. I think I explained it pretty badly. So basically what I said was the 236 in a downtrend. I look for that. I want to say that this is only in a, we're talking month long plus downtrend. So something that's downtrending, I want to say for 6 months plus. This is an arbitrary number, but something that's in a very, 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 very long downtrend, okay? So we're talking about a really, really big downtrend. I'm not using this every single day. I just really want to stress that. I don't refer to this every day. But when we then get a really, really, really long downtrend that's gone on for months, okay, we could say that we're not confident in this being a low until it at least hits the 236. Because if something just comes up here, well, you're just going to be expecting it to go down. If after something has been downtrending for, years, if it gets a bounce, but you don't even hit your first fib level, I would just have zero confidence. Why would this time be different than the other 10 times where this could have happened? So you have to remember, you would have had a small bounce. Let's draw this a little bit of an example for you all. Okay, so we come down, we go in like this, okay? Something like this in a really long downtrend, and then we get this. Okay, so what you would have done, let's say that this even gone for a year prior. Okay, so a year prior to this, from this pool, don't hit the 236, so we just have no confidence in it being a low. Okay, then from here to here, we start saying, I didn't hit the 236. Why would this time be different than any other time, sort of thing? Okay, you wouldn't hit it, sort of thing, and the same continues. And then obviously on here, what you can say is, well, here we hit the 236. So that's shown you that for once in this extremely long-term downtrend, we've finally hit the first 236. We could at least be interested in buying a retracement. It's just that when something's downtrending for months to years, I have zero interest in buying it. I couldn't ever care less if I bought the bottom of something like this. It would just be something that I myself wouldn't trade. But let's say that it was something that I had my half an eye on, okay? And when it hits that 236, it's the first show of strength that it's shown in years. It's still something I wouldn't buy, but nevertheless it is shown a sign of strength. That could be your first indication that you could look to buy that next retracement. Okay, so I hope that's explained it. This is definitely not something I'm using on even a daily sort of time frame. It's something that we're talking months to years downtrends, okay? Or just very beaten up charts in percentage terms. Okay, so a lot of the altcoins are beaten up like that. So it's just a way of filtering out that I'm really couldn't care less in trading something while it's not even hitting a 236 after a very, very big downtrend. Again, I wouldn't care on using it on this sort of move here. It's not something I'd refer to. It has to be one of the extended downtrends for a long period of time. So I hope that has explained that okay. Are there confluences from RSI divergences to the target of negative fibs? Yes, you could essentially, I'm not going to say it's incorrect. I'm going to say, yes, you could use divergences for these levels, okay? If you start, for example, on Litecoin, it's check, for example. So when we were looking at Litecoin here, and we know that we bottomed out at the negative 236 here, the question is, could we use divergences? And very likely you might have had, actually. Okay, so do we see bullish divergences here? You do see, yes, you do get bullish divergences. So you see price making here, lower lows. If I try and highlight this, so price making lower lows here, isn't it? Price made a series of lower low, lower low, lower low, and you do see a higher low on the divergence or the RSI here. So there's your bullish divergences going on to the level. So you could have used that. I myself don't refer to divergences like that really, but yeah, the answer is very much yes, you can use divergences. I myself do not too much, but you can absolutely, and you can see there you did have bullish divergences on that. Also for the WAN example, if you have a short order at the 618 but it only gets to the 0.5, no order will be filled. When do you decide to trade long or short from the 0.5? You can also see this on the Neo charts. So the question being again on WAN, that if we were looking to short the 618 and price only reaches the 0.5 and starts falling down, I guess it's one of these examples again that if we had zero reason to expect price to fall down, you just have to know that sometimes price will do this, because all it takes is for some random guy or girl to enter a massive short order, and that can ruin TA in a second, and that's why there's no 100% guarantee, because all it takes is one whale to fat finger sell or buy something, and you know it could ruin a setup essentially. Hence why risk management is so important. But you know, in this sort of example, if we were looking to short the 618 and we had no other reasons to think price was going to turn around here, and we're sat waiting to short the 618, well, if price started turning around before us, and after the first candle we see no reason to short, the second candle we're still expecting, you know, let's say this is on really low volume decline, sometimes you just will miss the trade. And if you're waiting for a level, it doesn't have to be the 618. You know, I will try, you know, I really don't want to get people to think I only trade 618 to 66, because that's totally not true. I trade the other fib levels, okay? It's just that this is a really high probability, but I will I will take shorts off 0.538 you know, it's really important that you know that I'm not only trading these levels on the fibs to begin with. But let's just say, for the sake of this example, that I was wanting to short here, and I had no intention of shorting this because there was no confluence. As price comes away from me, so I'm looking to short here, but as price starts running away, let's say this was on very low volume, well, I would have no reason to think that the sell-off would continue. So sometimes I will just miss the trade, and that's not a bad thing in my opinion. If I'm waiting to short here and price drops down before my short, well, I don't lose anything by not being in a position. I only lose money if I'm sat in a long at this point and I'm losing money on the long. I have no loss being trying to short something that never reaches. So I myself literally wouldn't care if something runs away. But let's say this was a heavy sell-off. Okay, let's say that did come on high volume. I could say, well, here we hit the 0.5, a heavy volume sell-off. That's an indication that I need to cancel these higher orders and short here, place my stops above the high volume sell-off, you know. So yeah, we could use that for an idea. I'm just going to take a drink, one sec. I will look at Neo for you 1 second, just to see if I know what you're on about. Neo BTC, just for another example. Oh, I have no idea which part of the chart you're actually on about. I guess here maybe. I'm not too sure. Oh right, so here, if you were looking to short the 618, obviously the volume is really high at this point. I guess if you were literally only looking to short the 618 and you weren't looking to short for any other reason, then you would have just missed this trade essentially, and you would have just missed that sharp pullback. And yeah, that would have happened if you were looking to short at that exact point. But I guess here you have some lows of the move, kind of tops out at the lows for an SR flip. But yeah, I trade more ontology, so I don't trade Neo, but I trade ontology. I prefer ontology. But yeah, Neo looks like it's topped out at around some daily level that I have. I don't know, this chart is old. Guess this daily level it's topped out at. Yeah, so it did top out at an old daily in this example. But again, you didn't really have any confluence to short that daily, if we're honest. So it's a bit more arbitrary. Like, I wouldn't have shorted this, if I'm honest, because there's nothing to line up with that level. But we can see where it's topped out at. But nevertheless, if you're waiting to short the 618, well, you kind of just lost out on that trade because you would have just never got filled. And at this, well, the volume was high on that sell-off, but you're in the consolidation, so it's just exactly the same as ontology, and it would have just been a missed trade if we're honest there. Same for stocks that went up for so long. When would you start looking for shorts? I guess the best example we can do is Apple. Like, I'm not interested in shorting this right now. I'm just really. This is the thing I don't understand. Like, in my humble opinion, why would you look to short something at all-time highs that's just on a steamroller? You generally going to make, and this is not specific on Apple, so I'm not saying buy Apple here. I'm just using this as a general example, by the way, just because of Apple's at all-time highs. But if something's breaking all-time highs and it's moving up, then why do you want to try and short it? You're going to make more money joining the train and longing these blue sky breakouts. If you had longed Apple as soon as it broke all-time highs, you're sat in profits right now and you couldn't care less because you could literally have your stops if you wanted to and break even or even in profits. That's the first thing I'd say. Don't try and short these all-time highs. I mean, why would you try and short it when you can literally just make money running with it? Okay, but let's say you do start to see examples of it starting to pull back. So what was the question again? When would you start looking for shorts? For me, once it's broken a pivotal level, like I see no reason to short Apple right now. And again, that's, maybe $258 is the exact high. Okay, I would maybe look into short it once it breaks 250. So I don't get the exact top of the move, but I start looking at as it breaks down from key levels. So if it breaks 250, well, I'm interested in shorting. But until it does that, I have zero interested in shorting, and I'm long. Okay, I'm still long on Apple, and I have no reason to close it until it breaks 250. So it's like one of these scenarios of it's generally not a good idea to be the hero that shorts the exact top, because anyone that tried to short the exact top, okay, on these stocks, lost. At some point, you're going to be the hero that gets it right. But do you want to be the hero that got it right and use that as an ego for yourself? Or do you just want to, not be the guy that loses? Somebody's going to short this every time. They're going to take 9 losers, win 1 trade and think they're amazing. Or you could be the guy that's longed this 9 times, misses out on 1 trade, take 9 winners, 1 loss. I'd much prefer to be that guy than being the guy with the ego saying, I shorted the exact top of Apple, look at me, and ignoring the 9 losses that came before that. I'd prefer to be the guy that, happily kept long in every retracement and eventually took a loss, okay, but I make more profit because after I'm out of that, if I'm out of the long for a technical reason, well, I'm then looking for a short, stops above the high, okay? It's very, very simple as that, if I'm honest. I'd wait for a key level to be lost on an all-time high breakout, blue sky breakout. I just have no interest in trying to short something like this. Do not see the risk to reward is great, okay? Because every single time you've tried to do it so far, you've just lost money. So why keep trying to do it, That's my opinion on it. And I hope that helped. just wait for a key level to be lost. We could say 250, for example. It starts losing that. Well, then you can have more confidence in $258 being the high. But in my opinion, trying to short this each time is more for ego and trying to say that you shorted the exact high. And you see the numbers fizzing up in front of you saying, oh, if this is the high and we drop down to 228, oh, the game's so big. But I'd prefer to be the guy that shorts 250 down to here and make this much profit than adding on this extra profit but taking a lot more risk where I could more happily play this long. That's my opinion on all sky and breakouts, and yeah, that's all I'm going to say. WAN was already rejected at 382. What made you think it will come higher? I have no idea the context of what you're saying there. WAN BTC. WAN was already rejected at 382. What made you think it will come higher? I honestly have no idea what you... not to be rude, but I have no idea what you mean by your question. I just have no idea, Paul. I don't really understand the question. You're going to have to try and write it again because I'm really sorry, but I have no idea what that question means. Yeah, just write it again. I'll try and answer that one again. WAN BTC on your slides. So why did I think I had no idea, if I'm honest, that WAN was going to find support at a negative 236. This is more of a hindsight example that it found support here because I was not longing here. So this one on WAN is a totally, as you know, like WAN is not a coin that I trade. So WAN is not a coin that's ever on my watch list. Neither is Neo. Like it's not a coin that I trade. This was more of just an example from WAN. So I didn't long this on WAN. So I had no idea there was going to find support here. This was just purely an example, if I'm honest with you. I don't trade this. So I had no idea that it was going to find support at the negative 236. It just so happened to be a nice example of from 0.5 to 236 here. And that's the exact, that's WAN. I don't trade it. For the end of the stream, if you have time, please. I notice divergences are low on your list of confluence factors. Can you show us how you use them, if ever? Thanks. I've done a whole live stream on this. I've done a live stream on divergences. I hope hopefully that has helped. I've done a whole live stream on divergences. I kind of refer you to the live stream rather than repeating myself now. Just watch that live stream, and I kind of I do explain about divergences and how I trade them. Recent move up, no long the new 618, but it's clear. Thanks. Cool. Link finally pumping again towards daily. Oh yeah, 5%. Wow, it is. WAN BTC on your slides. You skipped my question, Bob, above the WAN question. Oh yes, so I did. Apologies. Fibonacci sequence. The golden ratio is 1618, but in trading, price reacts to more the inverse ratio 0618. Do you use the 1618 as much as the 0618? I use them both. So it's really hard to explain this. I'm not ever favoring one over the other. So it's not like, so if we just flip this to so it's not like, for example, you know, I'm not favouring here the negative 6, you know, just standard 618 over 1618 extensions. You know, it's not one's better than the other. It's not that the golden ratio or phi is better than phi. it's not that the 1618 is better than the 618, or it's not. It's just what has more confluence at that moment in time. You just have to think back to me saying I'm not using these levels alone, and once you realise I'm not buying off of every 618, I'm not selling every 1618, I'm only using these levels. Like I'd happily not buy this if there was more confluence at the 382, you know, because you have to remember that every you know, let's say every drop that you get, let's just say you come up here and let's say you get a rise, okay, after that rise you take your fibs from low to high, don't you? Okay, every drop is not going to come down to here and bounce. You're going to see moves that come to here and bounce. So you have to realise what has more confluence. Do you have more confluence here, or do you have more confluence here? If you have more confluence at the 382, then why are you waiting for the 618 just because it's a good trade? It doesn't make sense, because you're going to miss out so many trades, you know? So you have to be looking at what has more confluence. Do you see confluence here? And it's not just fibs, okay? And then, for example, of the negative 1618 being the golden ratio, it's not that this level is better than this level. It's just that, does this have confluence? And if it does, it's a good level. If this has confluence, it's a good level. It's definitely not one's better than the other. I hope that has explained that really, really well. Firstly, I never use this alone. I don't even use Fibonacci alone. I always will combine it with something else. And secondly, it's not that one fib level is better than the other. It's not that the 618 is better than the 382, because you'll see many instances of bounces off the 382. You know, it's a really, really key level that I trade off of. So it's not like every single trade I'm waiting for this level. Because that would mean I'd miss out on a lot of trades that I take, and I don't need to do that. I just trade with whatever one has the most confluence with other technical tools, you know. So I hope that one has explained that question for you as well, of that. So I believe I've taken all those questions there. If I've missed your question, apologies, just write it again now. And I hope that has absolutely helped. Oh yeah, so what I was going to end with here, I'll go over why I was in this short on Bitcoin, or I'm still in it, but I'll go over this trade now. because it was really, really, really lovely confluence. And this is just a perfect example now, even more perfect because it's actually traded out as I expected. So it would have been annoying if we had carried on up and broke the high. Obviously yesterday, as you all know, when I was shorting these levels, my stop loss was above the high, and I was comfortable with this high because I had confidence in it getting rejected here. And obviously some people had their stops above this high, some of us had their stops above this high, or some people, I guess, had their stops too tight. I don't know, not everybody follows my stop losses. Some people could have had a very tight stop loss, got stopped out, and then see it go towards you. And hopefully today will be an example of a real example of a trade of why I give myself wide stop losses. I mean, to be honest, this was an acceptable stop loss, but at the very least, I have my stop loss up here. So yeah, I give myself wider stop losses when I have high confidence in my trade playing out. I don't want to be stop hunted. So let's go over the confluence that we had here. It's absolutely lovely. It really, really, really is. So if you want to see some confluence, this is what I'm looking for. When I see this, I will happily give myself a higher risk percentage, e.g. a bigger position size, because I just have so much confidence in it playing out. So I will increase my risk percentage. I'm not talking crazy amounts, but I will increase my risk percentage when I see confluence like this, because this is perfect. You got 4 levels together. So confluence number 1. Okay, just zoom out and show you this a second. So confluence number 1 is price was at the 0.5 of the range. We all know 0.5 of the range is a significant level. So that's confluence, very simply number 1 off of our overall range that we got going on here, which is really, really nice. That's confluence number 1. Okay, the 0.5, simply the 0.5 of the range. Okay, let's zoom into the levels again. Obviously, the short I entered was yesterday, and now we're 24 hours later. But this is what I was looking at the time. So from this white line is the 0.5 of the range. Okay, so what else then do we have here? We know that's not enough. Okay, from adding in a 1-to-1 extension from the low to the high, back down to the low. You can see the 1-to-1 extension sat exactly on the 0.5, exactly on the 0.5, give or take a few dollars. Another level of confluence of why I shorted here. Okay, so we had the 0.5 of the range, we have the 1-to-1 extension, there's 2 levels of confluence. Then we also have from the low to the high, put that onto negative. Okay, from the low to the high on Bitcoin, you see here from low to the high the negative 236 also on that level. There's 3 levels of confluence. By the way, we did top out at the negative 618 there. So you hit the negative 236. You got that rejection all the way down to the monthly, to the dollar, by the way. Monthly to the absolute dollar perfection, bought straight back up. You come up, you hit the negative 618 to the dollar. You got another rejection. You come back up. I'll go over this in a minute. It makes me excited. Not for the money, just because I love this. The next level that we had of confluence here, by the way, was from this high down to this low. You also had the Champions channel in here. That is 4 levels of confluence. Okay, 4 levels, from 3 from fibs, 1 from the range. This makes me excited. This really makes me excited, and it's not excited about, oh, I'm gonna make money on this. It's excited because I feel like I'm making a good trade here. That for me, it makes me happy. So I felt my little senses tingling on this trade, and I was right. I was right because we are now sat at 9,200. Obviously, average position for me was around 9.4 in the end, because what happened here? Got the move up overnight. As you'll know, the confluence that we had from this to here. Look at the confluence. There's your negative 618. There's your golden pocket, just a Champions channel just above you. Okay, there's your Champions channel just above you, just so you're aware, by the way. This was the pull from the overall high here down to that low. Okay, so there you run exactly into it. 9,450. You have the order block in there and everything. Just really, really easy trade in my opinion. So that's a short. And you can obviously see, so this is now where you're finding a little bit of support. It looks like it's heading down, if I'm honest. But a little bit of support coming in then, obviously, from the low to the high. We can obviously see from here, we have, well, historically found support of which is the 2.5 of the range. Getting a bounce again. Coming in here to, you can see where you bounced off of here, more or less the 6.6. Okay, getting another bounce. But it looks to me as if this is heading more down. So yeah, there you go. That's why you saw this bounce. So that, you know, if you're buying 9250, which we know is a monthly. We know that's a monthly level, so you do 100% have confluence. The 6-6 and the monthly together is confluence, so you could 100% have longed that, and it would have been a nice, obviously more of a scalp trade, but you 100% could have longed it. But yeah, there's confluence on that to long, and now it's obviously heading back down. So yeah, I mean, that is why I was so happy with this short. Why I was comfortable giving myself a wide stop, and why I was comfortable adding up to 9450, or just above 9450, because we then had a secondary champions channel above this one, so it's just like so much reasons to short Bitcoin yesterday. Very much. And then on top of that, so that's not it, on top of this, and I'll load this up on here in a second, I don't want to be signed in for everybody. On top of this, we all know that the funding rate is also very high. It's coming down a little bit now, but nevertheless, it's been very high today. I was feeling really bad about being sat in, obviously my midterm longs I'm referring to here. It was really hard for me to sit in these longs because the funding is very, very high, and it kind of pains me to be sat in longs while the funding is so high, because you've got to be feeling that there's a drop coming when the funding is like that, because it just is not good to be sat in longs and paying such high funding rates, because you essentially just sat in you are just sat in a position and paying for it, and also losing money on it because price is heading down. So that's why you see these moves down. But yeah, that's my opinion. If you have confluence at multiple fib levels, how do you choose which one to pick? E.g., when pulling fibs, you have a daily at the 382 and a weekly at the 618. What would you be looking for? Well, I guess I would trade the 382 first. I would trade the one that's closer, or I would switch to laddering. So if I saw good confluence at the 382 to the 618, I could ladder into it. Okay, so a weighted ladder where I'd weight it to the, well, I guess it really depends on context, but if you did have really strong support at the 382 down to the 618, it's one you could ladder your bids in from those levels. Okay, so you could have, if you wanted to, for example, done a few different ladders, so a bid, and a bid sort of thing, and then 25%, 25%, 25%, 25%, and ladder in to this trade, where you could weight it nearer the top if you wanted to, if there was actually strong support here, where you could go 50% your position, 25 sort of thing, and then if you do bounce there, great. If you get all your position filled, great. That's one way that I generally look at it. If there was strong support at both, but if there was strong support at 382, I'd be more inclined to buy the 382 and not ladder to the 618, because if I think it's going to bounce 382, there's no need to ladder down in that, in my opinion. But yeah, laddering is a good option if you don't have the confidence of entering a full position at one level. By having a wide stop loss, doesn't it lower your risk reward? It does lower your risk to reward. Yeah, it does lower your risk to reward if you have a wide stop loss. But yeah, the simple answer is yes, it absolutely does lower your RR on a trade. Falling wedge on Bitcoin 15 looks like it could apex at the monthly, could be very bullish. Yeah, I mean, for me, take profit has already been hit on this short. Obviously, I'm looking down to 9153, but if this bounces up here, I'm not bothered anymore, because I've locked in. So if we do find support here, that's great. I wouldn't really class this as a falling wedge though. What time frame? 15-minute. Yeah, I don't see this as a falling wedge myself. I really don't see that as. What are you looking at here? Like this, I guess, maybe. Yeah, you got a little bit there, but I wouldn't be buying it until you at least break out this channel, okay? Until you at least do this, okay? Take out this last high, or then maybe you can be a bit more interested. So get above 3,330, 9,330, and you'd have more confidence. And I wouldn't be a buyer just yet. For me, I wouldn't be a buyer just yet, because you are essentially just making low, lower, high, lower, low, lower, high, lower, low, lower, high. Obviously, if you come up and break this high, well, that's your higher low to the higher high. But at the moment, you're in the downtrend, and I'd trade it like that. If you start breaking up from here, especially 9,330, I could close out this early, if I'm honest, and look for a long. So yeah, I don't think it's a picture perfect rising falling wedge in my opinion. It's really not a perfect falling wedge. But that's my perspective. Um, link. Oh, there you go. Well, that link is from this weekly. Ah, that's lovely. Um, Hi Dan, could you share your wave count on ADA? I don't have a Elliott wave count on Cardano. I don't have simple. I don't have one. I could do one, but I don't have one readily prepared for you right now on Cardano, so I can't share it. I feel like writing your trade with all the levels for Confluence as my log. What to look at? Look for a trade. Amazing. I'm glad you like that. I'll DM you the wedge on Discord. Okay. Oh, the DM's not come in yet. I have a feeling that you posted it in the chat earlier, though, didn't you? I have a feeling you posted it in here earlier. Oh, there. This. Yeah, I thought you posted it. Forwarding wedge on the 15. So you're looking at it like this. Yeah, I mean, to be honest, you could argue that it's there, but yeah, I wouldn't be looking to buy it myself until it claims 330. I wouldn't do that myself until 330 is claimed. Yeah, so this was the wedge that he's on about, by the way. I guess it's okay. The volume is also not really great. You want to see that declining volume, and this is not declining. But you know, visually, I guess I just feel it's more force fitted. So yeah, 330, you could look for a buy. I wouldn't be so aggressive just yet. If you want to be aggressive, then maybe you're right, and this pumps now to 5,000. I wouldn't mind missing out on the you know, you're talking about a difference of about 0.3% here. I myself would wait for this market structure change than going aggressive at this point. Don't see the need for 0.3%. But yeah, I'll give you my levels on Cardano though. Absolutely, like I'm obviously, you know, from the trading updates, I'm still long on Cardano, so I'm long on this. And really, I'm looking up for around 500. You got that psychological number. It might not hit at this point, but obviously you've seen that higher wick rejection. But yeah, obviously got back in on the monthly retest, so it broke monthly and it retested it. So and from there, it's kind of just, you know, you claimed a level. I'm looking up to around 500 sats, but you know, there's currently no reason to believe that it won't stop seeing profit, I guess. And if you follow my trading updates, which I hope you do, by the way, I saw a really nice comment today. Where was the comment? Because it did make me smile. Where was it? Yeah. Thanks to the trading updates, $120 profit today, and that's because Rob did actually follow it. He wrote it this morning saying he shorted, and his target was my. He was targeting for the local support, wasn't he? 9287, and as you can see now, we're sat at 9297. So if you closed out with that local support like he done, he followed his plan, stuck to his guts, made some money from my trading update. So that did make me smile. That did make me smile to see this guy making some money from that. So I hope those trading updates are helpful, which I've obviously been telling you that I've been trading this. So obviously, you know, trading XRP short, and for me it was Matt, Ethan, and Cardano that I've been trading long for the last few days. But yeah, this is more like scalp trading, but nevertheless, yeah, it's nice to see. I don't know. I just like to see people finding use in that I do. That's so that was nice to see that. Decent trade, and yeah, I guess that's going to be the end of the stream tonight. I hope that you. Oh, so you're getting a little bit of some lower wicks. So we'll see how if this develops into support. But yeah, hope that you have thoroughly enjoyed tonight's video. I will catch you in next week, where we'll obviously be going over part 3. Okay, so part 3 next week of Fibonacci, where there's just more of this magic to learn about. So I hope that you enjoy that. If you're a champion, obviously I'll see you across in the chat again. And if not, then I'll catch you in next week's stream, which will be obviously on the 13th, same time as always. So I'll catch you next week. Hope you've enjoyed. Thank you everybody so much. Hope that you all share the passion and love for Fibonacci and trading in general as I do. It's absolutely lovely. It really is. I love it. So hope that you are falling in love like I have. And cheers everybody. Good night, and I'll catch you in the next one. Thanks. Bye.